Walmart is projecting a cautious outlook despite beating revenue and profit estimates in the fourth quarter, citing trade uncertainty and labor market conditions. The retail giant says e-commerce and speedy deliveries are helping to drive results. Let's get more insight on this from Michael Lasser, equity research analyst at UBS. Michael, thanks very much for joining us.
Thank you for having me.
Is this kind of Walmart being Walmart for this report? Good numbers,
really well said,
and cautious.
Yeah, trying to be conservative. I think it is Walmart being Walmart. Super steady, a 4.6% increase in its U.S. same-store sales, strength across most of its international markets, along with Sam's Club, profitability that was in line with what was anticipated, and then providing a forward look for the year ahead that's trying to be reasonably prudent and leaving room for potential outperformance. So this definitely is Walmart being Walmart.
All right, and looking back on the quarter, any surprises or any numbers that caught your eye?
There were no surprises. Maybe that was the key takeaway. This was, I would say, straight down the middle of what was anticipated. It shows that Walmart's working at and operating at a very high level. The model, which is to drive stability in the core business of selling groceries and general merchandise and layering in profitability benefits from deploying automation as well as new business streams that are very high margin. All of that is working quite well at this point. It is reflected in the valuation, and the stock's had a bit of a move, but we think over time, as the company continues to execute this strategy, the shares will respond favorably.
And then looking ahead, should we read into this as being an indicator? I know we just said Walmart being Walmart. Is there an indicator of how the U.S. economy is shaping up over the next year?
I think the indicator or the signal from Walmart is that right now, everything is steady. Whether or not that continues, we're all banking on, external factors like the labor market. So we'll watch that closely over the months and quarters ahead. But as far as the health of the U.S. consumer, right now, the key takeaway is that trends are quite stable. And we would, in fact, expect that to pick up a little bit as these tax refunds are distributed to households in the coming weeks. And there is a high propensity to spend those dollars.
And where do you see Walmart focusing over the next year? What's their priority to you, do you think?
So I think there's a couple priorities. One is continuing to take share. It has done a remarkable job of doing that, especially through its online channel. Its online growth in the most recent quarter was 27%. There's just not many retailers, especially of the size of Walmart, who will have generated that type of growth in the fourth quarter. Number two, continuing to deploy its strategy on automation and alternative revenue streams. And then number three, infuse a deep sense of agility within the organization. As we all know, the world is changing remarkably fast. This is a large business with more than $700 billion of sales. At times, that can be difficult to remain nimble. So I think the key for Walmart from here is to remain agile and change with the changing landscape.
We'll touch on that for first. Is a company this large capable of being agile?
Without a doubt. And that's what makes it pretty remarkable. It's operating right now from a position of strength, with momentum in the business, good sales growth, a very effective and prudent strategy, and a new leadership team that is bringing a renewed focus and a slightly different perspective to the organization. Some of the reasons for why these leaders were chosen was because of the speed and agility at which they operate. So that should act as a catalyst to help speed up the ability for this organization to remain nimble in the environment.
And then going back to the online, you said it's was it, I think 27%? Did you say growth?
Yeah.
Was that because it had room to grow, or it just did a really good job?
It's done a really good job. It has a $100 million GMV business, $100 billion GMV business online in the United States. So It's it is operating at scale right now, and yet it's still growing very fast as it captures more customers and more spend from customers.
And is it getting? I mean, with this, traditionally we think of the Walmart average Walmart shopper as the average American almost. Is it getting that higher end? Is it working that as they try to bring them in?
Both of those are true, meaning the Walmart customer base looks a lot like the US population at large. And where it is seeing a disproportionate amount of market share gain is amongst those more affluent consumers who tend to spend a bit more online and more overall. So that is encouraging for the Walmart investment case.
And what kind of growth have they seen in that market?
They haven't clarified that, but it is the very largest portion of the overall market share gains that Walmart's been achieving. So, if it's been growing a couple hundred basis points above other retailers out there, a good portion of that is coming from the high end.
Okay, Michael, we have to wrap it up there, but thank you very much for joining us.
Have a good day.
You too. Michael Lasser is an equity research analyst at UBS.